So, a very good evening to all mentorship traders. We are on Friday the 13th of November 2020, end of a trading week for us. Eventful weekend. Very happy Diwali to each and every one of you. It's been an amazing run for the markets. I welcome all our new mentorship traders to our community. I am very much sorry I was not in a position to conduct last Friday's session. Went out of the city for a couple of days, a breather next to the river. Every year I do that, same place, same river, just to refresh. The Wi-Fi every year is fine, but it seemed like this year it was sub-average. So didn't take a chance of conducting a very jerky session, and so I had to cancel. I'm sorry for that. But tonight we're all good, we're all sorted, and the first few minutes, like always we do, we'll talk about the index, a few sectors, and then I'll take care of your doubts and questions. First and foremost, I have the Nifty chart in front of me. This is the daily chart of Nifty. Before I come into the nitty-gritties of this daily chart, I think what is important for Nifty at this juncture after the amazing run-up is the weekly chart. So this is the long-term price behavior of Nifty from the weekly charts. And the reason I say that the weekly charts is a little important because now we see that thanks to this movement, the prices have entered the resistance from these channels. The upper border of all the three channels are in the price range of 12,500 to around 12,900. So if we can just round it up to say that 12,500 to 13,000, that's the upper channel border of all these three different time frames, especially the blue one, because that's the one which is the most prettiest. So from a weekly perspective, we are looking at the index entering a zone of medium-term to long-term resistance. Now, resistance does not necessarily mean that the index has to come down. Resistance also does not mean that the markets will break the resistance and go away. It's just a sign of caution. It's just a signal that we should act accordingly. Now, if I drop down to the daily time frame and try and look at the nitty-gritties of this move, first and foremost, I'll first tell you that the index has finally taken out the resistance from this red rising channel. Remember how we have kept this channel intact since late August, and how in mid-September and mid-October, a couple of times this channel proved to be an amazing source of resistance, but not this time. This time the buying was too good for this channel to hold prices back. So the index has comfortably taken out this channel, and I don't see any need for keeping it further. So I'm gonna get done with these eclipses also. Now what's important is the wide gray colored resistance. If you look at, these are the resistances from all-time highs. The index has taken that out and has reached to a new all-time high, and any drop from the current levels would definitely find some support in this zone. But this zone is really wide. It's not a 50-point zone. For the Nifty, if I even take it down a little bit, it's around a 400-point zone. So we'll keep it for some time. We'll see how effective this zone turns out to be. Now, if you look at the behavior of one-way bounce rallies from the lows of March this year. When I say one way, this is the first one. If you want me to mark it for you. This is the first one, which primarily is the first bounce back. To a lot of extent fueled by short covering. This led to a 19.7%, almost 20% kind of a bounce back. One way means without any short-term correction. The second one was here. We have kept them marked for quite some time, which is again a one-way rally, which took the index up by around 17%. The angle of the second one, of course, is much more normal than the first one. First ones, in terms of short coverings, are most of the time very sharp. And then after this, we had this one-way rally few months back, where the angle of acceleration was almost similar to the last one, and the gain was around 11%, and it went up for 11 bars. Now, where we are right now with this run up is it's around 8 bars and it's around 11%. So it's very, very similar in terms of price gain and rate of acceleration, more or less similar to the last one. And finally, if I bring in our relative strength index, which is down here, we see an early sign of a negative classical divergence with these two. Let me just confirm whether, so it's just minorly lesser in terms of closing prices, but RSI has started to drop down a little bit. These don't add up to confirm that it's a bearish market. These don't confirm to say that this is not the right time to buy and go sell and all. What it all merges, the weekly resistance, the size of the gains from the daily chart is more or less entering the matured zone, where that's the kind of movement that we have seen recently. The divergences on the relative strength index, it's not an exact divergence, but almost. So all adding up to the fact that, okay, we've got a wonderful surprise rally, a pre-Diwali bonus bumper, market going to an all-time high. The sell-off, the negative sentiment from the pandemic seems to be completely shrugged off by the index. Is the index forward-looking? Has it completely discounted the pandemic? And all these things put together brings us to a state where, okay, this is probably not the best of the price as well as time to go overly bullish. If I have a portfolio, if I'm making some returns here and there, might as well protect it, might as well book some, go underweight, but not overweight, definitely not. Short-term traders is fine. These kind of markets will not affect short-term traders too much, but medium to positional traders or investors, I would suggest not to get carried away by the sentiment and the emotion in the market. So I feel that the index is approaching resistances, and it will try and respect that. So be a little careful. We can still go long, we can still look for short-term swing moves up, but back of our mind, there should be a conscious understanding all the time that every relative upside from here on may find stiffer resistances. This is a 75-minute chart of the Nifty, nothing much to take away from there, but I think the 75-minute chart of Bank Nifty, yeah, which is this one, or should I first take you to the weekly charts? Yes, of the Bank Nifty has given us an exceptional move. This is the sector, this is the section of the market which pushed the market up. If you recall, we've been talking about the Bank Nifty and its underperformance for quite some time. And then over the last couple of months, we've been talking about the financials and the Bank Nifties and the banks moving into the improving quadrant and should be leading sometime soon, which means that it should pick up, and it did pick up. And it's primarily private sector banks which did exceptionally well. I have this couple of channels on my weekly chart of Bank Nifty. The blue one is a pretty strong one where we can definitely see some decent source of support as well as resistance. The red one is an erstwhile channel which was respected very well, then broken down. Generally, when these kind of things happen, going forward, it can face some resistances. But I think it's got some headroom left. It will try and test the psychological 30K mark for itself. But it had given an enormous sharp movement, which is very, very clear from the daily chart. Now, it is the daily chart of Bank Nifty which is very interesting of all the time frames. Number one, it's given us channel breakout. Generally, when we see a rising channel breakout like this, there's always a throwback. There's always prices coming down to test the close to testing the upper border of the channel. So this channel border should act as immediate support from here on. Now, in terms of my Fibonacci numbers, this particular Fibonacci series that I have here, the index actually respected the 50% beautifully of the same phase of Fibonacci that I've drawn here. And now it is entering the 76 and 78.6, 76.4 and 78.6 band of Fibonacci. I use this. This is time and again, it has proved to be a very, very important level. Now, this is 29K. This is 29K and 29,350, 400, let's say 500, 29,000 and 29,500. That's surprisingly where earlier supports were. That's surprisingly where falling gap is also there. So it seems like 29,500 is again an important resistance zone for the Bank Nifty. Now this is literally vertical. This is as if, it's just maybe 87 or 85 degrees, almost 90 degrees kind of a move, which is good but unsustainable. No signs of divergence or divergence to be on my momentum indicators. After a long time, the blue line over here, I've plotted a relative strength with the Nifty. So the Bank Nifty has finally moved above the zero line, which in terms of common sense means that now it is an outperforming sector. It has been an underperformer for quite some time. And finally, after a long time, it has managed to go to the outperforming zone. Now, long story cut short, it is in a strong uptrend. It has potential to go further up, but considering the rate of acceleration, considering the fact that it is approaching some bit of serious resistances, I think if it has to take out 30K from here on, it should consolidate. That consolidation can be in terms of time or it can be in terms of price. If it's in terms of price, it should come down. If it's in terms of time, then it should consolidate horizontally. The chances of a second one is much higher. What it will do, it will consolidate, it will not correct too much. By doing so, the momentum indicators will come down. It will create some headroom and then pick up, and then we can expect the index taking up 30K and further up. Maybe follow the Nifty to an all-time high. Very, very obvious for the Bank Nifty to follow that. But it's got some significant upsides to go. It's not going to be easy. If you look at from the current price back to the lifetime highs, like here, so that's going to be a close to a 15% rally from here on. I just drawn an info line just to figure out. So a 15% rally is not small for Bank Nifty, but the possibility is very much there. Let's take a look at the other sectors. I have the Nifty NSE indices shared here, and I've sorted them in terms of percentage gains for the day. So I'll be looking at the daily chart. Now, CNX Metal has given a very good move. There's no doubt about it. But it's now entering some serious resistances from this zone. It has recently slipped into the underperformance territory. So we need to be a little careful with the metals. Real estate on the verge of giving a fresh breakout thanks to DLF. So good move, but I think short-term traders should be a little careful. Pharma has gone into a big range. If you can see here, of course, it had been one of the early movers from the bottom of the pandemic lows, but now it has gone into a range. And you can see down here that since early August, it has been jerky. It has been outperforming, underperforming, and so on and so forth. So the trend is intact, but this is consolidation in terms of time, not price. Mid and small caps are doing exceptionally well. They are also on its way of hitting a new life high. There's no doubt about it. PSU banks, stay away from it. Stay away from it, except State Bank of India. It doesn't make sense to look into any PSU banks. Big underperformance, and it will continue. Can't help that. Small cap is on the verge of a breakout. Looks like an ascending triangle, not a very clean, neat one. If you manage to draw something like this, it's an ascending triangle breakout, which we are looking at. The small caps and the mid caps are both doing very good. Energy had its share of sell-off from Reliance, equally strong bounce back. OMC is bouncing back, but I think OMCs will now cool off. And the index is back to resistances. Very, very clear signs of resistance in this zone, not only from just current highs, but if you extend this further, you will find the same level being tested multiple times in the past. So this is an important level for energy. In fact, this is like a long-term trend defining level for the energy. This is a monthly chart, so you can see how serious this level is. So OMCs, I think, will cool off. So be careful next week when you deal with stocks like HPCL, IOC, or BPCL. Private sector banks, Kotak, ICICI, Axis Bank, HDFC Bank. Phenomenal move, and every time it has dipped down a little bit, it had given us a very, very good bounce back. The movement of the bank Nifty will come primarily 90% from these 4 or 5 stocks. So you need not take a look at some other names like IDFC First or others. If you just focus on HDFC, ICICI, Kotak, Axis, and you can add SBI, you're good, you're sorted. IT, big move, but it's still consolidating. The big move came alongside pharma back down in March, but this consolidation, this recent consolidation, is taking too much time. So I think it will be under the shadows for some time now. Auto, very interesting, has moved into a new high. It has broken up, given a breakout here, but again, it's dealing with some serious resistances from the highs of October and Jan. So we can clearly see a few sectors which have given us a very good move in the last 8 days. Nifty has taken itself to a new life high, but the few sectors are yet to do that, and they will face some amount of resistances. FMCG continues to underperform. It's going to do a lot more. See this, see the blue line, how it's been below the zero for quite some time. It's been completely underperforming. Media doesn't matter too much apart from Z and PVR. So a quick look at the sectoral indices suggests that we should continue to look at Bank Nifty and the 4-5 top banking stocks. You add financial names to it like Bajaj Finserv and Bajaj Finance, but let them cool off. Let them cool off because they've moved too much too soon. A bit of attention we can put into the pharma and the IT. I think they can support the index, and the energy stocks, especially Reliance and the OMCs, especially the OMCs, may face some bit of resistances going forward. So I think next week would be a little mixed bag. The index and the sectors and few large cap stocks will not find it so easy to rally further up or crash down. So I think we are heading for some volatility going forward next week. But strategically, maintain a bullish bias. Do not try to show too much courage in this kind of high momentum market and try to go short. You might pay the price. So keep a bullish bias. And if you get short trades, make sure it's from a weak sector like an FMCG or a weak stock which has not performed with the market, or else it's far better and easier to stay with the trend and look for some swing long opportunities. All right, that's my take on the index and the various sectors. Now, like always, I request you to post your doubts and questions, and we can discuss upon your trades for the week. Let's begin then.